Hi everyone and welcome to today's morning report on Wednesday the 9th of March with me, Rich Perry, market analyst at Antec Markets. The European trading session's got off to a fairly solid start, slightly supported, and I think that has sort of turned around on the oil price really. The oil price had quite a slide yesterday, um, and sort of retraced all the way back from sort of over 38.40. Interestingly enough, 38.40 was basically bang on that January high. Interesting. But this uptrend is still intact, but being tested. And the support that you found in the oil price today, just very slightly higher, 36.60 as I look at it, sort of about 0.25% higher. And I think the correlations between that and the stock markets continue really. We had a slide in the stock markets yesterday as the oil price slid away on the back of that Chinese data, or the trade data. And the oil price found support today, and equity markets have found support again. So I think that there is still a big correlation between the two, and it's still an element of the driving force behind the markets. What we have seen is this continued uptrend really in treasury yields, despite the fact we had a quite sharp down move yesterday, and they've sort of rebounded a bit today, sort of maintained that uptrend, which is decent on both the 10-year and the 2-year on the US treasuries. And subsequently the dollar has rebounded as well. So finding that rebound in treasury yields helpful for the support of the dollar today, and that's basically what we're seeing through forex markets today. A bit of a dollar strength theme coming out. The recovery in the crude price has also helped to generate a little bit of risk, or I say a little bit, and that is also helping the commodity currencies as well higher. But watch out for today, because we've got the Bank of Canada and the Reserve Bank of New Zealand both giving monetary policy. Both are expected to stand pat actually on rates, but you could well find both talking about inflation or lack of inflation potentially being another reason why you'd have to cut rates in the future, but not necessarily at the moment. In terms of our economic data today, we have not really got a great deal on the menu. Just the UK industrial production at 9:30. That's expected to come in at plus 0.2% on the year-on-year data. So that would be obviously back above zero. Look at that last month; that was the lowest since mid 2013. So that was a big disappointment. So you'd need to see that recovering pretty quickly. Manufacturing, certainly on the PMI data, has been sort of deteriorating, and that's reflective in the actual production data as well. That takes me to my chart of the day, which is Euro Sterling. Now I'm looking at Euro Sterling in front of this ECB meeting tomorrow, and look at this uptrend channel that we've had. 3-month uptrend channel that got broken last week, and it's now beginning to form a possible head and shoulders top pattern. You can see this pattern playing out here. We've got the momentum indicators that are deteriorating. You've got the RSI that fell below 50 for the first time since that uptrend channel began in December. You also had the MACD lines falling away as well, and the stochastics moving into negative. So this support of the low at 76.90 is important, something that we need to look out for in the coming day or so. Certainly with this meeting tomorrow, the expectation of further easing should be a drag on euro and pulled euro sterling lower. We had this quite a sharp move initially upside yesterday to 77.90, which subsequently retraced into the close. And we're seeing the continued retracement of that move. I'll show you that on the hourly chart. You can see this that sharp move high yesterday again starting to take to the downside. So we are sort of putting pressure towards that key support of 76.87 to the tick. 76.90 generally seems to be that big support area, and that sort of marks the bottom of what could be a head and shoulders top pattern. If you completed that, you'd certainly look out for a retreat back towards the next key support around 75.20. Is that next key support. A couple of occasions it hit that in January and February, so that would be your implied sort of next move, and we could well see that certainly if the ECB sort of comes out and drastically eases monetary policy. It'll be an interesting one to watch, but certainly euro sterling looks like it's going to be pulling lower towards that 76.90, and if it breaks that, certainly on a closing basis, that would complete the top pattern and imply further weakness or further correction back towards that 75.20 area at least. So I wish you good luck in your trading today, and I will speak to you again later.